Retail sales over the December month were surprisingly weak, falling 1.1%. Over the December quarter, sales contracted 0.4%, largely as expected. However, with revisions to Statistics New Zealand methodology for the Retail Trade Survey, this effectively revised away the pre-GST spend up we'd seen in Q3. Q3 retail spending volumes were revised from a 0.7% increase to a 0.4% contraction. This large downward revision added to markets' disappointment with the retail trade data. Nonetheless, looking through the change in methodology for Statistics New Zealand survey, retail spending over the second half of 2010 has been very subdued. This is in line with the weaker run of data that we've seen over recent months. In particular, the housing market has been adding to the retail sector weakness. With low turnover and a very low number of new houses being built, housing-related retail spending has been very subdued. With activity in the retail sector and the housing market remaining very quiet, we expect the Reserve Bank will leave interest rates very low and stimulatory for most of this year, and we think that OCR will remain on hold until September at least. The New Zealand dollar dropped against all the major crosses following the weaker retail trade report. The New Zealand dollar did regain some ground against the US dollar during trading yesterday, although then remained quite subdued overnight. There was very little economic data offshore to drive sentiment, and markets remained fixated on Eurozone debt concerns. Indeed, we saw the euro decline against the US dollar overnight after Portugal's GDP contracted 0.3%. In addition, we saw talks of an Irish default on debt. Looking ahead, we see downside risk to the New Zealand dollar this week. In particular, the potential for a stronger Chinese CPI later today could raise concerns of further policy tightening from the Chinese central bank, which would undermine commodities and commodity currencies. In addition, key economic data in the US this week includes the Retail Trade Survey and industrial production. Both these series have been running stronger of late, and another strong report could add to further confidence for the US dollar weighing on the NZ dollar. Strong trade data out in China yesterday helped underpin commodity prices overnight. In particular, we saw wheat prices hit the highest level since August 2008. Drought conditions in China are also adding to higher wheat prices. Recent snowfall has done very little to alleviate drought concerns in China, and as a result, there are concerns for wheat shortages this year. Higher wheat prices will flow through to higher grain prices more generally, and as this adds to the cost of production of dairy in the US, this is ultimately beneficial for dairy prices going forward.